The strikes at the US ports could turn into real serious situation for Black Friday shopping and the Christmas shopping season. So let's look at Amazon, at Walmart, and one stock that nobody's talking about right now that's setting up for really interesting swing trade to the upside. Hey, my name is Daniel Helmy, head of trading here at Bull Markets Lifestyle. Welcome to Hot Trades of the Day, your daily show for swing trading ideas for the coming days and weeks. And we're going to jump right into it. We got a lot to talk about. And we're starting, of course, with Amazon. So this is the chart of the past year. And as you can see, from a swing trading perspective, it's really a nothing burger. Okay, so what do we got? Amazon couldn't break through the major resistance line, the blue line right here, that I'll show you in a little bit. It broke the midterm uptrend, not good. It went down to the long-term downtrend, or one of the many long-term downtrends. Bounced off, developed a new uptrend. Nice. That's good. Check mark. Tried to break the resistance line again and failed again. And as you can see, it's right at the uptrend now. So what does that mean? That means as swing traders, we're kind of in a pickle. We're in the middle, right? The real signal is triggered. The real short signal is triggered if Amazon breaks below 183. So let's say you get in at like 182.80. The next long signal really will be triggered once you take out this high right here. So we're talking about 197.10. So that means both of these areas will be your stops as well if you go in the opposite direction. So if you want to go short, you actually wouldn't want to go short right here. You would have to wait till it breaks below 183, so 182.90, and then your taking profit zone is this support zone right here, which as you can see held once, twice, 3, 4, 5, 6 times, and then 1 time as a resistance zone. So that's a strong support zone, and we come into the strong fourth quarter. So we would assume that this zone holds. So we got 182.90, and if it goes back to the middle area, this is about 174.50. So we got about $7, $8, let's say $8.50 maybe, depending how far down in the resistance zone, which is now the support zone, the stock would go. So that's about, I mean, from where you would go short, right? I mean, that's about like 4 or 5%. But on the other hand, if the trade goes against you, you're getting it at 182.90 approximately. But really, your trade gets invalidated only if you go up to 197, 197.10. So that means we have a $12 risk. So about an $8 reward to a $12 risk. That's a terrible risk-reward ratio. You don't want to get in on this. Now, what I do like and would support the thesis of the stock price going down is this crazy divergence in the RSI, this negative divergence, as you can see. Stock price went up, RSI is going down. That is interesting. But again, if we open up this zone, and now you can see where this major blue resistance zone comes from. It comes from the old double top and from 2001. We also see that all the uptrends are fine. We see how strong the support zone is. So this will likely hold unless we're going to see a major correction in the markets. So right now, Amazon, for me, not interesting on either side. Now let's look at Walmart. So let's start with a long-term chart. So we got an ABC wave happening here. Wave A, the uptrend right here, till about 2020. Then we have a period of about, it's about 3 years where Walmart just consolidated. That's the B wave, right? The consolidation wave. And then it broke out, and now we have the C wave, the second uptrend. So, and we see how powerful this has been. We all know the reasons Walmart really has their shizzle together fundamentally. They know what they're doing. But matter of fact is, as you can see, this is a stock that you buy on weakness. This is a really hard stock to make money on the short side. I did make money on this down move here, but you see it's not significant. I banked like 10% or something. So the way to play it is you wait till the uptrend breaks, then you usually get a correction that you can play on the short side, but it's not a lot. So that's really not very interesting on the short side. But on the long side, yes, the the stock is going up. It's making one all-time high after another, but oof, I mean, it's so overbought. It's so steep. I would not want to get in on this. Another stock where I say we don't need to be in every trade. We just need to be in the best trades. And here's the trade that I'm buying. Etsy. Now, you know Etsy. I don't need to tell you about the business they do. They would profit from shortages of Christmas presents or Black Friday presents as people are looking for alternative ways to get presents for their kids and their loved ones. Now the stock chart doesn't look like much. It's basically it's forming a bottom, but we can still see the downtrend is intact. We have a couple of gaps open, right? Most notably this big one around 52, which with the stronger Christmas season coming up, it's unlikely that this gap will be filled unless we see a major downturn in the market. So here is why I like Etsy. Even though right now at this moment, I agree, it doesn't look like much. And this is when we move out. So this is the long-term chart that you see right here. If we look at the past 2 years, we had very similar patterns where the stock went down and then out of the blue, in the beginning of November, look at this. The stock started a big Christmas rally. This is 2023. 2022, stock went down and then out of the blue, it just made a new low. Beginning of November, big Christmas rally. So seasonally, we are right at the same point, right? We're about a month out. So I can see this consolidation just going a little further, especially if the markets are a little tricky. Now, this area around here, around 84, 80, maybe down here, anything around like 54. That's what we're talking about. So that's a zone that is absolutely realistic. We have seen it was just there at this area about a week ago that the correction would go down to this way, to this price action. Now going and closing this gap again. I mean, this is for very speculative traders that really think we're going to have a bigger correction in the market with the Christmas season just around the corner. I would get in around 84, maybe with half of the position. And then if it goes down to 52, why am I saying 84? 54. 54. And then if it goes down to 52, I would buy the second position. And then see if it forms a bottom here. As you can see, if it breaks this resistance zone with a long-term downtrend and this horizontal, which was support, now is resistance, we're going to get all the power in the world to move up. And this up move could be significant because, as you can see, we have a bunch of gaps open around 65, around 68, 69, that then would be filled immediately in this rally. So Etsy is the play that I like when we look at the retailers thinking about the situation with the port strikes, with the major shopping season about 2 months out, which means in about a month, the market will start anticipating, and that's why the rallies for the Christmas shopping start at the beginning of November. The market is anticipating a good shopping season. So we look at the past 2 years, this looks really good. Oh, let's take a look at 2021. I didn't even do that. Beginning of November, right here. So we're already in an up move because this is 2021, right? This was the crazy rally. But as you can see, it also started another up move. It went higher, and then so this is the seasonality of Etsy. I like it here. This could be an interesting play using the current weakness, the short-term weakness in the stocks to buy in on the long side and betting on the Christmas rally. That's it for today. Talk to you tomorrow.